Hey everyone, and welcome back to another episode of Zepp Finance. So we're back with another segment. I didn't think I'd do one so quickly, but I did want to talk about debt. Uh, the title of this video is "The Easiest Way to Become Rich," and the easiest way to do that is to not owe anybody anything. It really is. I don't think everyone knows how much money interest actually costs them, and if you simply do that where you just pay cash for everything, you save up for the things that you want to buy and you never have to take out a loan, you will be so much further ahead than a lot of people. I also know that that is way harder to do than what it seems, right? It's a simple thing, but it's not easy. But I did want to illustrate some numbers because I've seen more and more games, to tie this into the gaming industry, just get a, a lot more confident in their cost structures. I think most of us, at least watching this channel, know that we like supporting games that we like. That's how we justify it, which is okay. We can spend our money on what we want to spend our money on as long as we have the money. We don't want to borrow money from banks in order to get something digitally on our phone that we won't even care about, a week from now. Um, so, with that being said, that's what today's video is going to be on: the true cost of what borrowing money ends up being for you. Uh, we'll tie this into other videos in the future about whenever you don't owe anybody anything, you have so much more spending power to either invest in yourself, invest in, the stock market, which uh, I like to do personally. I think it's one of the easiest ways to make money without having a whole lot of, stress or just effort. It's pretty simple, but you can start your own business. You can take courses or get certifications that get you more money at your companies or wherever you're working. Uh, that's the whole point. Is if you aren't paying back additional funds for money you borrowed, you then have just a lot more money than you'd ever think uh, to end up building a life that you want, which is what we're all trying to do, right? So I had this AI generated PowerPoint presentation just to show you two important things. I will touch on car loans as well, but there are three like major things that people borrow money for. One is a house, which I think is reasonable. However, I don't think people truly know how much money they pay in interest on their house. So looking at home loan interest rates is kind of important, but I don't want to go into that. The second one is a car, which is owned by banks. It may seem like the dealership owns them, but if anybody has bought a car and paid attention, you'll see that you'll start paying someone and then eventually you end up paying somebody else. It's because the car dealerships end up selling your uh, your loan to some kind of bank or credit union. And then credit cards, which are owned by banks. Uh, whether it's through airlines or whoever, it's a bank. And the banks are terrible institutions. think I think they started out as a good idea to help like communities, and then some greedy person got involved and just yeah, destroyed it. Anyway, so credit cards. This is what most people in the mobile space probably are spending or buying things on for their mobile account. And it's very easy to lose track of this because it's not a physical, like tangible thing in your pocket anymore. It's just some number that's up in the cloud that all of the banks are keeping track of on a digital spreadsheet. And if you're not careful, if you're not tracking what you're spending, you could end up spending money that you don't have. And you end up putting yourself in a position where you had to borrow the money to do it without even knowing. Like, It's not like you didn't have the money because the bank doesn't know how much you're spending on your credit card versus how much you have in your bank account to pay for the credit card balance. They just know that you have enough balance on your credit card to pay for that transaction. So you might end up borrowing against that bank without them even agreeing to it or you agreeing to it, right? So I want to give you an example of what could possibly happen if you're not careful. I love this example here, which is showing that credit cards are a interest calculation that happens monthly. This is a big thing because each month your balance tends to increase, right? Uh, but for this example, what they show here is if you were to spend $5,000 on a credit card and then never purchase anything else on that credit card ever again, and you just pay the minimum payments, after 5 years, you will eventually pay off that $5,000 payment or purchase that you had, but you would have paid $4,800 in interest, meaning your $5,000 purchase 5 years ago actually cost you 10 grand. It's absolutely insane. Credit cards are the scariest thing. You'll see a lot of personal finance, like personalities, have a very catchy line where they call people, they're like, "You're not a credit card person." Which I think is true. Some people are very, very responsible with credit cards. They track their budget, they know how much they're spending each month, and they put it on their credit card because they get cash back. They get points for travel or restaurants or whatever, and that's great as long as they're doing that. But most people don't. Most people will end up putting themselves in a position where they buy something that they don't have the money for, but they're fine borrowing it against a bank. And in the end, they just get to this point where they're like, I've been paying this credit card for how long? And the amount is staying the same or it's gone up. What is happening? And that's really, really scary. Um, So I did want to say if anyone who's watching this channel is struggling with their finances and they want to have like a video chat that we can do on YouTube and walk through like how you can get control of your finances, I would love to do that. That'd be a lot of fun, but only if you are comfortable doing that, right? We'll omit a lot of the personal things out, of course. But if anyone wants help, there's an email below in the description. You can send me an email and then we can schedule a call and then we'll walk through like your finances and what you're trying to do. Right. So this is the first example. Pretty scary. Because the other thing I think we all know is people just don't spend $5,000 on a credit card and then never spend on it again. Right. What a lot of people are doing is they're spending $5,000, paying the minimum payment, and then putting another 2,000 on there and then paying the minimum payment. What ends up happening is this spirals. It gets out of control. It ends up getting to like $20,000, $40,000 and people are like, "Oh my gosh, what the heck happened?" It's because you're borrowing. You are owing somebody something. That's what you should never do that. When it comes to car loans, very similar thing. I don't have like what it ends up costing you, but the interest rates are 7 or 8%. And most people are buying cars that they can't afford because what the car dealerships and the banks do is they show you the monthly payment. They're like, oh, yeah, this car is $60,000, but you'll only owe $800 a month. Don't worry that it's only for 6 years. You can get this fancy, shiny new car if you just borrow the money from me and then you pay me back a little bit of interest here and there, over those 6 years, and we're good. But when you look in detail at the numbers, let's say, you pay $50,000 on that car. In the end, you end up paying, I think, somewhere around like 58,000 or $60,000 for the car. And after the 6 years, the car is worth like $15,000. Pretty terrible deal, right? Where if you're buying a car without borrowing it. Sure, you might have spent $50,000, but you didn't pay $58,000 or $59,000. And you had that additional money to eventually go use it on yourself or spend on investments to make you more money. But again, like I said, we'll get into that a little bit further. And then the last one is mortgages. Uh, Mortgage rates have been pretty brutal after COVID. I think a lot of people know that or feel that. It's a big topic of discussion in the finance world. Uh, it's usually directed towards boomers because boomers say, "Oh, you just need to work hard and save money and stuff like that." And then the young people are like, "Oh, yeah, that's nice that you bought your house for $40,000 back in the '40s, but it's not the same thing." But I think both sides are probably a little accurate in their mindsets, but also probably a little bit wrong. Anyway, let's say you have a $300,000 house that you borrowed from the bank at 7%. After 30 years, which is the usual mortgage, you end up paying $417,000 just in interest. So you paid $700,000 for a house after 30 years, even though the initial value of the house was 300. Now the nice thing is houses typically go up in value. Um, it's not always the case, but it's certainly the norm instead of the exception. So this one isn't as bad, but I did want to show an example uh, because my own sister, there was a time maybe 3 or 4 years ago where she wanted to buy a house, and it seemed like a small amount, but the interest percentage, I think at that time was like 7.5, maybe even 8%. And I was just showing her, look how much money you end up spending on that house. And it wasn't in an area that I thought was uh like it didn't go up in value a lot. So she ended up not doing it, which is good. But the I guess the message there is people truly don't understand how much money that interest ends up costing them because they don't see it on paper. Because again, the bank is just showing you how much you have to pay monthly. And that's the trick. It's just like, I'm going to show you that you can afford this really awesome, cool thing, even though you're going to be indebted to me for 30 years. And you better hope that you keep making the same amount of money. Your job is still there. You live the same lifestyle because if you want the fancy new car, there's another monthly payment. And then you see how the stress just ends up building up because you feel like you're stuck. You can't do anything else that you want to do because you are in this position where you owe so many different people money. And that's where I'll close this is as I progress with this channel, I'm going to talk about more and more things as to how you can get a hold of your finances and take control of it. But I think the most important thing for you to wrap your head around is if you end up owing people something, you will not be rich. Uh, for all the people out there that talk about, leveraging debt and all that stuff, yes, mathematically, you can have a point, but the amount of stress and risk that you put on yourself, I don't think is worth it. So if you just don't owe anybody anything, you will eventually be rich. I promise. So anyway, that's another segment of Zep Finance. I appreciate you watching. Catch you on the next one. See ya.